The IRS is working on a new tax form to capture your crypto activity. As I mentioned, the IRS was behind the curve when in 2000 and before 2020, actually 2021, the IRS didn't have any rules on how they had to be reported, and some exchanges would use the 1099K, which is not actually for, it's not like a brokerage where it shows you what you bought, what you uh, and the basis and all of that. It just said how many trades you had. So if I traded today, I bought $1,000 worth of something today. I sold it and I bought another $1,000. Now it looks like I bought $2,000 worth of assets, but I have the same $1,000. So I'm grateful to be involved in two things that are never going out of business: Bitcoin and taxes. Well, for taxes for sure. I think Bitcoin too. I think it's a bunch of hype. But let's see what happened. The IRS is looking to get more efficient in collecting taxes from crypto trading. What happened? The Infrastructure Act passed by the U.S. Congress in 2021 brought cryptocurrency exchanges under controversial broker definition and subjected them to the IRS information reporting regime. We talk about information reports a lot on this show. Again, we mentioned all the 1099s, the 1098, the W-2s, all of these information returns. As a result, starting January 1st, cryptocurrency exchanges will be required to report their customers' annual cryptocurrency gains and losses to the Internal Revenue Service, similar to stockbrokers. The Treasury is crafting regulations related to the Infrastructure Act. Regulations, commonly referred to as regs, interpret legislation and give specific direction on how to comply with the law. As part of the regs, the IRS is reportedly working in introducing a brand new tax form called Form 1099-DA, digital asset, for exchanges to capture individual annual cryptocurrency activity subject to taxation. The draft regs are expected to come out in the next coming months, and for now, the specifics of the form and information it will capture are unknown. If adopted, exchanges will use the new form to report your cryptocurrency gains and losses to the IRS. What are 1099s? A 1099 is a form filled out by financial institutions summarizing a client's annual activity subject to taxes. There are a few different types, including 1099Bs, proceeds from broker and barter exchange transactions issued by stockbrokers to report annual gains and losses arising from stock transactions, 1099 INT, interest income forms, which are used by financial institutions to report annual interest income, 1099 miscellaneous information forms that some cryptocurrency exchanges use to report staking and similar types of income. There are three copies to each 1099 form: copy A, copy 1, and copy B. The first two are filed with the IRS, and the IRS and the taxpayer state, respectively. But by the financial institution, copy B is sent out to the customers to be filed with their taxes. For example, say you purchased 1 unit of TSLA for $500 and sold it for $1,200 on the Robinhood during 2021. By January of this year, Robinhood was required to fill out a Form 1099-B showing $700 of capital gains subject to taxes. Copy A and copy 1 report this amount to the IRS and to your state, respectively. You receive copy B to help you file your taxes. The purpose of 1099s. Thanks to information reported to the IRS by financial institutions through 1099s, the agency allows your annual gains and losses before you file your taxes. If you file a return without including that activity, the IRS can automatically detect the discrepancy and send you a tax notice to correct the error. Thus, 1099s help ensure that taxpayers engaging in income-generating activities with financial institutions are tax compliant. It's really the IRS keeping an eye on you, making sure that you report everything and getting their fair share, according to them. Form 1099-DA. Currently, there's no dedicated 1099 form to capture one's annual cryptocurrency gains and losses. In the absence of a cryptocurrency-specific form, certain exchanges have used 1099-Ks. I talked about 1099-Ks, and they're wholly inadequate to report cryptocurrency activity in the past. Some have decided not to issue any forms for gains and losses. As a result, the information reported to the IRS by exchanges has been poor to non-existent for a long time. This has led to lower tax compliance rates among crypto users. Because customers don't receive a form at the end of the year, they falsely believe that there's no activity to report and no taxes to pay. For example, 99% of taxpayers report wage income when they receive a W-2 from employers. Over 80% of stock account holders report capital gains and pay taxes when they receive a Form 1099-B from brokers, summarizing the annual capital gain loss activity. On the other hand, if a third party doesn't generate a tax form, more than 50% of taxpayers do not comply with the taxes, which is why the IRS wants to make sure everybody has an information return for everything that you do. And again, that's why they want to go after your bank account. Form 1099-DA aims to change this by capturing cryptocurrency activity and mandating exchanges to report it to the IRS on an annual basis. It is reasonable to expect that a new form will report the information needed to calculate gains or losses, such as the asset type, date purchased, date sold, gross proceeds, and cost basis. 1099-DA potential pitfalls for multi-exchange users. Although information reporting has clearly increased tax compliance in many non-crypto related areas, following the same traditional system in crypto can easily create more gaps or even completely fail due to decentralized finance, transfers, and self-custody. Rapidly growing DeFi exchanges such as Uniswap and DYDX will be unable to issue any form of 1099s because they are not collecting so-called know your customer information for users. This information is generally required to file any Form 1099 with the IRS in the States. If you don't know who they are, how can you send them a 1099? Additionally, asset transfers between crypto wallets and exchanges are extremely common compared to the traditional securities world. These transfers between centralized exchanges to from DeFi and non-complying overseas exchanges will also lead to incomplete and inaccurate 1099s due to cost basis gaps. Moreover, self-custody is common in the crypto world to ensure the privacy and security of the assets. Self-custodied assets will also make it harder for exchanges to issue complete 1099s because the cost basis information is not usually available. Finally, multi-exchange users will likely get multiple 1099-DAs from various platforms. This can lead to confusion and will require taxpayers to use crypto tax software to reconcile activity across multiple wallets and exchanges. If you are a single user exchange user, a shrinking segment of crypto investors, 1099-DAs will likely show all the information necessary for you to file your taxes accurately. This will make your tax filings faster, easier, and cheaper than they are today. According to the Infrastructure Act, exchanges are required to follow information reporting rules starting January 1st, 2023, and issue 1099-DAs to customers in the first quarter of 2024 for the previous tax year. But because the rules have not yet been publicized and made available for public comment, the timetable may be extended by a year. The next step, expect to see a draft Form 1099-DA form along with proposed regs in the coming months. And then there's some further reading. Okay, so here's another story. This is a short story here. Let's blow it up a little bit so we can read it. In November 2021, Congress passed the infrastructure bill containing the so-called broker rules. The broker rules require that crypto firms collect customer transaction data and was set to commence in 2023 with full reporting to occur in 2024 for calendar year 2023. Recently, it has been reported that the IRS is considering a delay in implementing the reporting, although no official statement has been made or confirmed. Since the passing of the law, industry stakeholders have been critical of the proposed reporting, stating that the change will require significant internal software and reporting systems upgrades and associated updates to relevant customer agreements, given the invasive disclosure requirements. Treasury and the IRS have not offered a reason for the delay, but it could potentially relate to the IRS's efforts to develop a new information reporting form, Form 1099-DA, digital asset, which would be used for this reporting. A draft of the form is set to be released within this year. Alternatively, the government has indicated that in the 2022 reporting Green Book that the further crypto guidance is forthcoming, including a revision to the broker rules to make the reporting less onerous for non-institutional taxpayers. While the cause or duration of the potential delay is unknown, it is a welcome relief for taxpayers who have been preparing for the new reporting standards in 2023.